Ken Range Theory Trader back with you with another video showing you how you can quit your job trading the 5-minute chart. So let's not waste time and get right into it. What this video is going to cover is a decision flow on trading this model and some real chart examples. So while this is sparse, I'm going to make a very detailed video showing you how you can do this. So first and foremost, here is our decision flow. First thing you're going to want to do is determine your daily bias. In other words, what direction are you going to be trading? So there is a daily bias video on this channel already. However, there were a couple nuances I failed to mention on that. So this one here, I just want to be sure to cover that. Let me mention this as well. This setup also works on the 15-minute chart, but for this video, I'm going to focus on the 5. But here we go. But it works on 15 as well. So here's how you determine your daily bias. Very simple. If a daily candle, closes green above the weekly open price, and that candle is not an inside candle. What is an inside candle? An inside candle just means that the prior high and low of the day did not get broken. And I'll draw it so that you know what I'm talking about. I'll show you an inside candle, so just remember that though. Okay, so if it's not an inside candle, if it breaks the high or breaks the low of the prior candle it was just at, then your bias is going to be short. Okay, and you're going to short above or at the prior day's high. Again, I'll show you this, so just be patient. Now, on the converse side, if a daily candle closes red below the weekly open price, your bias is long as the prior day's low is met or even broached. Okay, and again, I'll show you this. So next up, so that's the prior thing. So if you're looking at Monday and Monday candle, I'll use a short example. If Monday candle closes green above the weekly open price and that daily candle is not an inside candle, then going into Tuesday, your bias is short. Okay, so on Tuesday, what you're looking for is this. On the 5-minute chart, ideally during London, starting at about 3 a.m. Eastern Standard Time, 3:30 Eastern Standard Time, okay, is there a money candle? And what is a money candle? A money candle is just the candle, the one single 5-minute candle that creates the lower high of the day. Okay, that's it. So it's just one candle. So all you're looking for is just one candle that has created the higher low of the day above or right at the prior high or low of the day. Okay, and again, I'll show you this. Okay, and then once the high of the day has been created, has price closed below that money candle. All right, and then after that, you're not entering just yet. What you're going to be looking for is a fair value gap. What is that? A fair value gap is just a 3-candle pattern that the wicks of candles 1 and candles 3 do not overlap, thereby it leaves a gap. And again, I will show you this, and there's indicators you can use to illustrate all this. So don't let these terms throw you off. Okay, so once the fair value gap has been created, that's your main price action confirmation to know that trend is underway, and you can either enter after the fair value gap is shown at or near the high or low of the current trading day, or you can wait for price to retrace depending on the size and distance between the high and low of the day and the size of the fair value gap. All right, but let's stop wasting time. Let's set up the chart and see how this looks. Okay, so let's get out of here and we're going to go over to trading view. And let's make this chart completely blank. And Swiss yen, not that that matters. All right, so the indicators you're going to need are, if you go to trading view and you go to indicators, the first one you're going to need is mark levels. All right, the next one is going to need is fair value gaps by Nephew Sam. I don't want to say that's it. And then we'll toggle the settings here a little bit. You don't need equal highs and lows for mark levels. You don't need anything about the month. The weekly open price you will need. You don't need the previous though. All you need is to check is the weekly open price. That's it. Okay. You can do current high or low of the week if you want. That's up to you. We'll leave that checked for now. But you will need the day checked. You can leave the daily open checked. And you definitely need to have the previous checked and the current high or low checked as well. And I'll have to make this a little darker, so we'll make the opacity 50%. I'm sorry, 100% to make the wordage darker. And then one last thing is I like to thicken the lines up a little bit. And that I think is right here. If it's not that one, it may be this one. Yeah, there we go. Yeah, that makes the lines there just a little thicker. That's just what I prefer. And then for fair value gaps by Nephew Sam, as far as the setting goes, all I do is I make the colors a little darker, about 30%. But other than that, you don't really need them. Sometimes you can, and I like to make the label a little bit bigger, like that. And for the most part, I leave this off until I actually need it because it just creates too much noise. All right, so let's go through this week, and I'm gonna just go ahead and put my pre-save template up here to be sure I didn't leave anything off. I don't think I did. Oh, okay. Well, yeah, you don't really need that. All right. So here we go. 5 minute chart. Well, this is the week at a glance. So I'm going to go through this and let's look at some examples here. And let me show you real quick what an inside bar is, or inside day. This candle right here is an inside day. And what does that mean? You see how this candle's high, this green candle's high and low was not taken out by this red candle right here? This is an inside day. If you see this where the high and low is not taken, you don't trade this day, or you don't trade the following day. All right. We only want to see price either breaking a high or breaking a low. We do not trade if the daily chart shows an inside day where it's not touching the high or the low. So that's what that means. All right. So we're going to get rid of that. And so we take a look at the week at a glance. So on Swiss yen, let's go through our decision flow real quick. So if I'm going through this day, pardon me. So this was Monday's price action. There was a red close below the prior day's, below the weekly open rather. Okay. But am I trading this day? I can, because it's not an inside day. If you look right here, the high of this candle, this green candle, was swept and it closed down here. All right. So it's not a completely inside day. So you got to look at that. So for this day here, Tuesday, I am safe to go long at the low of the day. So let's find it now. So what I'm going to do is go to the replay option, and I'm going to go to Tuesday. Okay. So this is our trading day right here. We have a red close below the weekly open. So Tuesday, I'm waiting for a low below or at the prior day's low. So now I drop down to a 5 minute chart. And then I just go through my steps. Now, obviously, you'd like to see this play out in real time. Let's see here. And now this is the part where I turn on my fair value gaps. So I allow that to be seen. All right. So the low of the day comes in right here at 12:45. It's a late low, but it is there. All right. So if I go here and let this play out a little bit, wait for the low of the day to appear, and it is there. And then a break above it, which has come. That happens right at about 12:55. Now, sometimes you can take an entry here, but for the most part, I don't. I like to see a fair value gap, or what's also called an inverse fair value gap. Now, don't let these terms throw you off. It's very simple. And notice here that the price action is below the prior low of the day. That's my favorite way to trade. Okay, I like to take longs below the prior low of the day. What that means is this: if I see a red fair value gap, you want it to be flipped. You want to see it closed above, because in a strong downtrend, these gaps should hold. If this gap get closed closed above, and that means it flips, but it has to hold as well. So let's see what happens here. So this right here, this gap is about to disappear. So let's just say we take an entry here for the sake of discussion. Long position, take it here, and we're going to put our low below the low of the day. So this is about a 20, we'll do a 25 pip stop. So I always preach 1 to 2 is fine. So we'll do 25.50, like that. And let's see if this fair value gap holds. Now, here is a bullish fair value gap right here. See that green one? That means, okay, the trend could be underway. All right. But the main non-negotiable, you can get out if the inverse fair value gap or the green fair value gap does get closed below. The main non-negotiable is going to be the low of the day. The low of the day has to hold. If the low of the day does not hold, the trade is invalid. So we'll just go ahead and let this play out here. See, you're also free to enter around here. See, I retrace back into, let me make this bigger so you can see it. retrace back into this fair value gap that we just drew, the one that was red that has now become green. It does not appear on this chart, but this is the price level. This is our area of interest. The only point of a fair value gap is to show you an area of interest. All right, so let's go ahead and just let this play out. I think this gap does get taken somewhat, but then eventually it does come out. So see, it does get, there's some consolidation right there. So it's an art, not a science. But that's the entry right there. Low of the day did hold. So you see we didn't get stopped out, and then I'm just going to let this play on out. Obviously, hindsight's 50-50, but let's see, do we reach profits? Yeah, I think right here. Yeah, there you go. All right, so in London the following day, this would have been an overnight hold, but at the same time, it did hit 50 pips during London session, so you would have had to hold that trade overnight. All right, so that again is our steps when we went through. Let me bring up the decision flow again. Okay, remember, okay, I have my daily bias, right? I was going long because there was a red close below the weekly open. 5-minute chart, I look for the money candle that created the low of the day. I waited for that fair value gap. In this case, it was a flipped fair value gap or inverse fair value gap that confirmed the trend being underway. And then I just took the trade at that point. So again, don't let these terms throw you off. A lot of people use big words to try to make themselves sound smarter than they really are. Trading doesn't have to be all complicated. I hate that. All right, let me go over that one more time just so you understand it if it's your first time seeing this. If you're using the fair value gap indicator, okay, and you see a red fair value gap near the low of the day, that's the thing. It has to be near the low of the day. There's something I teach called the power of one, which just means you're only looking for one candle, which is the low of the day, and one fair value gap. That one fair value gap can be an inverse fair value gap, which means it's a red one that gets closed below because it didn't hold anymore. The lowest one right here. Okay, see how that's the last one? See how that disappears and a new one appears here? Now this gap doesn't hold, but see this red one here? If the trend was going to continue down, that red one should have held and it didn't. All right, so now we're counting on this price level to pretty much hold because this green one did not. So let's keep going here a little bit just so you see this, and then I'm going to go on to another one. Okay, see how I took out the green gap, took out that green gap. So those green gaps they're gone. But this inverse here price is stalling. So inverse fair value gaps can be a great way. That last one, you just draw a little rectangle around it and keep an eye on that. Set a price alert for it. Okay, sometimes you'll just get a straight green one because the green one came later. But other times, if you can master looking for inverse fair value gaps around the prior low of the day for going long, you can make a lot of money doing that. Okay, so that's one. But again, it's just this price level right here. So don't be confused. You're only looking for one fair value gap, either a green one or a red one that closes out, and it's the same thing if you're going short. All right, so that's a long example. So now let me show you a short example here. So we're going to go back to the daily chart. Okay, let's go to another pair here. Let's go to Boundless View. And let's try to find a long example. I'm sorry, short example. That one was close, but not quite. Yeah, this is good. All right. So this is our trading day on pound. I'm sorry, New Zealand euro. Right. So what are our steps? If I come to the chart on Tuesday going into Wednesday, this is a green candle and it's above the weekly open. So it's because it closed above the weekly open. Is it an inside bar? No, it's not. Or inside candle? No, it's not, because it exceeded this day's high. It broke above Monday's high. So now, in terms of the candle range, this is where I want to trade at right here. That's my area of interest, at or above the prior day high. Okay, at or above Tuesday's prior day high. So this is my trading day right here on Wednesday. So when I do my replay option and I go to Wednesday, let's take a look at this and see how it looks. Okay, so this is Wednesday. This is the blue line I just drew, but the prior day high will already be marked, so I can get rid of that. Okay, so now what's next? If I go back to my decision flow here, I got my daily bias. It's not an inside candle, So on the 5 minute, ideally during London, is there a money candle that created the high, in this case the high of day. So where's my money candle? It's indicated by the high of the day, HOD, right here. So I put a line, I like to put a line right here to show when it breaks below. Price has to close below right here. Now, can you get in on the close below? Yes. I just like to see a fair value gap, and I'll make those visible now, just for some extra confirmation. So in this case, we'll keep it clean. Just a regular, don't worry about the inverse fair value gap, all that type of stuff. Okay, just a regular, good old-fashioned, bearish fair value gap. Bam, it's right there. Let me make this replay so you can see this in somewhat of a real time. All right. And again, if there's an inverse fair value gap, I'm not going to focus on that. I'm just going to focus on when that bullish one appears, or the bearish one appears, the red one. Okay. Bang, there it is right there. Okay. Now, what you can do is you can enter short when price retraces back into the fair value gap, or if you want to, some people just, they can't wait. The only thing with this, if you wanted to get in here, this is a huge stop loss. You know, this is like 57 pips above the high of the day. Some people, they'll also just put their stop loss slightly above the candle 1 of the fair value gap right here, because remember, it's a 3 candle pattern. Let me make this a little bigger. Okay, so you got candle 1, 2, 3. So some people will put their stop loss right above here. So that's a little better at 33 pips. So remember, just going 1 to 2. What can you target in terms of price targets? You can target London low or Asia low, and this is good for. It's still good for a 1 to 2. It's actually a little above that. So if we took that there and we expected candle 1 to hold, right? Because again, remember, we traded above it, traded above the prior day high in line with our daily bias. Fair value gap did develop, so we wanted to go ahead and get in. We trust that candle 1 will hold, and let's see what happens. I mean, does it get any simpler than that? Now, the reason why I like using fair value gaps is just a confirmation indicator. See how all these fair value gaps held, all these red ones? Price did not go back to them because it's in line with our bias. So we like for gaps to go unfulfilled. That one held, 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 that one. None of them flipped. So a word to the wise, if you want to swing trade or try to get greedy, this is a sign. This could be a sign to get out. If any one of the gaps flip, let's see if I can get one to close. Yeah, see how that red one went away? That could be a sign to exit the trade because the trend may be reversing for the day. So if you see red fair value gaps start to vanish, because eventually these gaps will get filled, all right, that could be a sign to go ahead and exit the trade. So if you want to use a fair value gap as an exit indicator, you can also do that too. Or just stick with 1 to 2. Like I said, I stick with 1 to 2. I'm not a swing trader. I'm fine if I can get a high of the day and then 1 to 2 down to either the London low or Asian low. You can make plenty of money just doing that. That's more than enough. So let's go over just a couple more examples here. So let's get rid of these drawings. We'll go back to our daily chart. Reset that. Okay. I don't like the fair value gaps appearing until I need them, because I don't like a busy chart. Okay, so let's go. Let's see. We just did a short, so now let's try to find a long. So go to here. Actually, wait, hold on. I can find that. Yeah, this will work. Okay, so we have New Zealand CAD. All right, so let's go through our steps. Let's say I come to the chart on Wednesday going into Thursday. I look at this candle right here. What color is it? Is it red or green? It is red. Where is the weekly open price? Weekly open is all the way up here. Okay, is this daily candle an inside bar? No, it broke below the prior day's low. Okay, so for this Thursday, I have a long bias. All right, and obviously going Thursday into Friday, if you wanted to hold it overnight, you could have. But let's just see if we could have got a 1 to 2 on this Thursday based on what price did on Wednesday. So Thursday is our trading day. So we'll do our handy dandy replay option. We'll drop down to the 5 minute. Let's try to find the money candle below or around the prior low of the day. So this is our trading day here. This was a USA session trade. That's fine. Sometimes it'll happen in US. So here's the money candle right here. Okay, price closed above the money candle. This was at 10:30 a.m. Price closed above the money candle at 10:40 a.m. Eastern Standard Time. Okay, so that's our confirmation. Now let's bring up our fair value gaps. And there's our green fair value gap right there. So sometimes it'll happen in rapid succession, and you'll just get them back to back. So let's see. Our entry could be here on this candle's open. Look at that stop loss. Now, if you get a tight stop loss, you put it below the low of the day, like 15 or less. So if I do a 15 pip stop loss there, 1 to 2 would just be a 30 pip take profit, or I can just target London's high. Sometimes the daily open will work too. But in this case, I'm just going to shoot for the high of London. It's 30 pips, which is around the London's high. Right, and let's see how this works, how this looks in real time too. They're just the replay option. So I'm going to select here from the money candle so you can see it play out. Right, so there's our money candle. Okay, money candle there, close above there. Fair value gap appears. So our entry more or less would have been like right here. So I was a little wrong on that. All right, but still the same. 15 pip stop loss would have been fine. Okay, so we're entering there at 10:45 a.m. and then we just let it play out. See how these green fair value gaps hold. Price retraces a little bit into this fair value gap, but it does hold. I think we're going to get into the next day. Yeah, so now we're into Friday. And price does hit our take profit and keep rising. Okay, and that's that. Eventually even reaching the Asian high and the prior high of the day too. I wouldn't keep anything beyond the prior high of the day. That could be a strong resistance point. So sometimes it can break out of that, but at the same time, sometimes it may not. But again, if you can just master getting 1 to 2 on every single trade, I promise you'll make enough money to pay all your bills. Okay? I'm not saying you're going to be a millionaire, but as long as your cost of your expenses aren't that high, you can provide for yourself and possibly a family. That's the thing. Doing this. So let's see one more short example and we'll be done. We'll get out of that. We'll go back to our daily chart. Set this. Get rid of those gaps. Okay, so now I just need a short example. Let me get rid of these drawings now. And what do we need a short? So I'm just looking. So I'm looking for green candles above prior day high. I think yen gave it. I don't think I did all of these. I know I did Swiss. I think I did Swiss. Whatever. Same thing. It's the same thing over and over. All right, so here we go. Friday. Here we go. If I come to this chart Thursday going into Friday, I have a green candle right here, which is above the weekly open. So my bias is short above the prior day high. This was Friday, which was just a couple of days ago. All right. Now, this was non-farm as well. I do not advocate trading news. I'm just going to show you this just in a matter of just in a matter of showing how it looks. But again, I do not advocate trading news. I'll put that out there. All right. So here we go. And I don't think non-farm is kind of uneventful too. It didn't back in the day. It used to go kind of hard. I don't see as much spikes as I used to trade. But in any event, now this was a rare one because the main move happened in Asia, believe it or not, and that will happen. So I'm just going to show. Matter of fact, I want to stick with London, so I'm going to forego that. Let's find a different short term because I really don't trade Asia. I do not advocate that at all. Let's see what the pound did. This one might be a little better. It might have given a London setup with a fair value gap, but let me check and see. Gaps. Because what you can do is you can take a London continuation trade based off of a fair value gap in Asia. Let's see if we have that here. We kind of do. It's close. So here's the deal with that. Because like I said, this is like 8 p.m. You know, it's like, you don't want to be in charts 24/7. Fair value gaps are best above the prior day high, and you have some price action right here. So let me see if there possibly could be an inverse fair value gap. Check it to see if we got a bullish one maybe. Nah, I just don't see one. So the best entry here would have been between 12:40 and about 2 a.m. Sometimes you'll have that on a Friday, but just not the best setup that I care to see or show you guys. So I'm going to get rid of that because I'm just not much for trading 24/7, 365. I think if you're always trying to catch a move 24/7, you're going to overtrade. So I'll get away from the yens. Let's try to find a different example here. See that? I think we just did that one. Didn't really give anything. And you won't trade every single day, obviously. Okay. I'll just try pound CAD right here. So, and if it's during Asia, it just is what it is. Obviously, you can't force trades. I'm not going to do it for the sake of the video. So, here we go. Coming to the chart on Monday going into Tuesday, we see this big green candle, which has exceeded the prior day's high, and it is above the weekly open. So, I want to go short above the weekly high, which is right here. So, when I go to the replay option, drop down to the 5-minute. Step number one, looking for the money candle. Where is the money candle? I'm only looking for one candle. That's it, guys. Okay, the power of one. Only looking for one candle. What candle made the high of the day? And it's going to be marked by the market levels indicator. So it's right here. It's this one. Did price close below it? Yes, it did. All right. So next up, my point of interest is mainly a fair value gap. So if I turn on the gaps here, there's fair value gap that held right here. Okay, and this is one where you could have either entered as soon as the gap appeared, or you could have waited for it to retrace back into it during the USA session. So you had two chances to take this short. I'm just going to see if it offered like a 15 to 30 on this entry right here. Because we count the fair value gap to actually hold. So yeah, you had two chances. Either right here, best entry could have been right here at 2:20 a.m. during London, or you had another opportunity right here between 10:25 to about, I'd say right at 10:45. In the tail end of the 10 o'clock hour right here, based on this fair value gap right here. London fair value gaps are good. The best fair value gaps are around or above the prior day high, but at bare minimum though, they should hold. So when you're trading, sometimes you may see a fair value gap disappear a little bit as price trades back into it. But every time a 5-minute candle closes, it should still be there. Okay, and as you see, because this one held, this one held, this one held. That's it. Now, some of you may be wondering, well, what about these green fair value gaps here? Can I trade those? I don't, because I don't trade against my daily bias. If I'm short for the day, I want to see this and these. I don't care about this down here. And ideally, if you're trading during London anyway, you would have been out just a few bars. Right, this was a very painless trade. This was a straight drop. This is what I love seeing right here. Just as soon as I get in, I want to see it go straight to profit. It goes down here, but still. Okay, and so that's it. Alright, so once again, this is a real simple trading method to show you how you can quit your job trading the 5-minute chart using the daily bias. This right here is a way that you can have a concrete trading plan, and it eliminates losses because of the inside bar days and as well the not benchmark, but the baseline of the weekly open price. What do I mean by that? Just to show you this one time, I used to teach that every time you see a green candle, you just go short, or if you see a red candle, you just go long. But of course, there has to be some nuance to that, obviously, otherwise you can overtrade, or you could be caught in a trending market, you see all these green candles. If you try to short every single one of those, you're going to lose a ton of money. So just on a weekly basis, I knew there had to be a little bit of a better way to illustrate this point of trading the candle range theory using the daily chart with prior highs and lows of the day, and the weekly open was that baseline for me. So in a nutshell, I want to short green candles above the weekly open, and I want to go long on red candles that are below the weekly open. So that was the missing piece of the daily buys. All right, but I appreciate your time and attention. Thank you so much for watching. Have an awesome rest of your day.